Okay. Should be good now? Should be good? I can actually just start it all over. Let me know if it's good. I'm in the Discord. Yeah, Dan, I think we should be good now. I'll just kind of do a brief synopsis of what we just talked about. Yeah, OBS on the stream. Yeah, let me make sure. Okay, cool. Yeah, there's probably just a little bit of a latency. Okay, so apologies for those that are on YouTube. Let's kind of run through the brief intro again. My mic wasn't working. So this is, what is today? Today is March 31st, 2025. It's the end of quarter one. It is a Monday, right at the cash close New York session. There's a lot going on in the macro, but we're going to kind of do the speed round here to introduce so that we can get everybody in Discord up to speed too. So my name is Spencer Riegle. I am the chief crypto options trader and strategist. Feel free to reach out to me on Twitter @_RIEGLE or LinkedIn. It's just my name, Spencer Riegle. I'm fairly active on both, so I do check those on a regular basis. So feel free to reach out there or reach out to me in the Discord. I'm also in Discord every day. So those are great places to reach out. Let's go into a disclosure first, right? And so all information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not always indicative of future results, right? And so kind of what we like to talk about is trading. You should be trading with risk capital. And what do we deem risk capital? Risk capital is not capital in which you need to make a bill at the end of the month. It's not what you need to buy groceries with. It's not even what you need for a great Friday night out on the town, right? It's not any of that. It's capital in which you're willing to lose. It's capital in which you're willing to risk for the reward, right? And so what we talk about each kind of week is how to recognize those opportunities and mitigate the risk, right? These markets are incredibly tough recently, right? There's headlines everywhere. There's a lot going on. It's a different environment since Jan 1, right? Jan 20, essentially, right? So there's a lot going on. So just trade with risk capital. It's not worth it for a lot of different reasons. One, if you're thinking about milk, you're thinking about eggs, right? Eggs used to be expensive last month. Then you're not thinking about the trade and you're not thinking logically about the risk, right? And so that doesn't set you up for the best success in this game, right? So we also talked about the website, and we kind of go over that every week now because it is fresh. We just launched it this year. So if you hop on, you're watching the recording, feel free to hop over to DARMA Capital Trade. Let us know. We spent some time on the website. It encompasses everything we do, right? From fact-based trading to kind of data analytics that we follow and are building and continually building, to even just some other things in which we're involved with, right? So feel free to hop over there. Let us know how it is. If you like it, great. If you don't like it, great. Let us know. I'm in the Discord, so feel free to pop in there and share your thoughts on that. So for those that are new and those that are old, you kind of know the drill. We go from a bird's eye view down in terms of markets. We talk about macro, and then we kind of get in the granularity of what's going on. And previously, before I realized the mic was off, we were talking about kind of data, right? And so what we follow, we get new data at the 0 UTC, the start of every month, start of every quarter, start of every year, start of every week, start of every day, etc., right? And so basically, the start of the week was 2 days ago, so we have about 48 hours of fresh new data on the weekly, but when we get some monthly data and we get some daily data rolling out, again, we'll get a bigger picture and quarterly data. Those are some larger kind of things that we internalize and follow as well, right? And so what can we do for this session here today? Well, one, we can talk about the first 48 hours of trade in Bitcoin and in Ethereum and talk about how they are, how they're kind of pricing through through the price map and then look at some liquidity bands that are resting in the Bookmap, right? So with that in mind, let's talk macro first, right? If you've pulled up the S&P 500, if you pulled up the NASDAQ, if you pulled up crypto, if you pulled up basically anything, there's been a lot of volatility, right? The reason for that, and we continue to talk about it every week, is the Trump administration is really shaking the tree. And when we say shaking the tree, we just mean tariffs and basically the escalation of just this tariff tit for tat, right? And so whether that's the Trump administration going after the Canadian government, the Mexican government, the EU, there was Russian news overnight, right? Ukraine kind of friction, all these kind of things, they just add friction to markets, right? And markets like certainty. It's hard to invest and invest in a large way in markets, right? Billions and billions of dollars, if you don't know where the next headline is going to come from, right? Absolutely, for those that are value buyers, right? Fundamentally, it's better to be long in markets than it is to be short historically. However, there's times and places, right? And so we are coming off of a year where we almost were priced to perfection, right? And so perfection needed to be withheld, needed to withstand, and it's just not what happened, right? And so the administration continues to talk about that there is going to be short-term pain for what they believe to be a long-term gain, right? What does that mean for us in markets? That just means volatility, right? Which is pick your points, stick and move, right? And don't go for huge home run trades, right? Because the reality is the trend, while it so far has been down since the 20th, it hasn't been down without large rallies, right? Bear markets, and we're not even close to a bear market, to be clear, in some of these indices, but historically and notoriously have very sharp rallies, right? So they're very hard to trade if you're too stuck on one trend, right? So macro, talking about it, two large events this week. One is April 2nd is going to be a tariff deadline, right? April 3rd is going to be the automotive tariff deadline. So those are two large events that start off Q2. We also have Q2, right? That should not go unnoticed. And that means capital flows are put back to work, right? While large money managers potentially had a very volatile outlook for Q1, they may change their mandates, may change their minds, may change their kind of projections going forward, knowing that the market now is discounted by a significant amount, right? What does that mean for us as we kind of transition through the next 2 weeks? 2 weeks potentially are still volatile, right? I don't see a scenario where all of a sudden the trend just changes and we rally right back to highs and without a hiccup here or there, right? There is a lot of repairing in markets broadly that needs to happen. That doesn't happen overnight. And especially without the backing of the Fed completely, which we've seen in larger declines in the past, that means that the V bottom that everybody kind of has been accustomed and used to just hasn't happened, right? And it just means that the time of these bottoms likely is longer than we're used to as well, right? So those are two events that are happening, three events largely that are happening. The third, obviously, is Q2. It's just a large macro kind of theme, right? Flows need to change. Rebalancing needs to happen. The outlook into the summer months starts now, right? And so those are just reasons to make decisions, right? And so when you apply binary catalyst in the form of tariffs, the expectation is still for a very volatile environment for the foreseeable future, right? So let's take a look kind of on a weekly basis. Let's get a little bit more granular and just not specifically just talk about, not just talk about kind of theories and kind of what's going on in the news, but let's also talk about kind of what's going on in the tape, what's going on in markets, right? And so honestly, the last 48 hours have been relatively tough in markets. And so kind of explain why, right? Let's pull up one of these. Let's pick Bitcoin first, right? Because that is front and center in most of the headlines. That's the one that's widely talked about. Let me make sure. Yeah. Okay, that's streaming and that's up. So on the left, you have our price map, right? So that's our quantitative and qualitative data. That's what we use to understand how markets are moving through zones in the market, right? You can notice that each part of these markets has a figure, has a color. That all means something, right? And if you really want to get into the weeds of it, reach out in Discord or head over to our website. We have a ton of FAQs over there that you can check out. But basically, we start out every week and we just talk about the directional, right? That directional is that DIR number, right? It's the yellow that you're looking at on my chart. I'm going to blow it up just to make sure that it's visible on YouTube, and the resolution is there. But basically, that's your over/under number for the week, right? Over it's positive, under it's negative. That's just a fact, right? And so there's two other key points that we need to make a point of and take a look at is your previous week's close and your previous week's low. That's what we've been trading in, right? Why I say it's difficult is because there's no clear direction currently, right? And so there are periods in time where we just trade around the directional. That's not a terribly easy market to trade because it lacks trend. It's also very tight typically. Now there are quick scalps that you can make, right? Transitioning over, transitioning under, right? Testing previous week's low, immediately we base here, we test again. But largely, right, when you're approaching this market and you're approaching kind of heading into April 1st, April 2nd, April 3rd, April 4th, right, the remainder of the regular session essentially for markets here, it's tough. It's tough, right? It's hard to trade a non-directional market, right? And so as we head into that, think about the binary events, right? So a day like today, right, where all markets point lower. The Nasdaq's off about 1.5 to start the session. Sunday open, it's just looking abysmal, right? We're looking to take out those recent lows that we traded off in the beginning of the year, and all of a sudden markets start to firm up, right? If they firm up, where are they going to go? Well, there's a lot of people that are just pressing into those lows. That is basically just setting traps, right? Does it mean that trend needs to completely change and that the market can't go lower? Absolutely not. Absolutely not, right? That's the hard part of trading these tight ranges. It just means that a week like today, or a week like this week, right, end of quarter, right, expect the unexpected, right? So if we start to base over the previous week's low, that's positive. That's just fundamentally positive, right? Where do we test? Previous week's close. If we can't break under this previous week's close, 82,600, right, this week, there's no reason to be a bear of this market. There's no reason. Why? Next week you pull up Yahoo Finance, like we talk about every week. We try to make it super simple. It's going to show green, right? There's no reason to be a bear when the market isn't over last week's close, right? Just because that's fundamentally a positive sign, right? So if we're over 82,600, where's it going to go? 83 is that low, right? And a lot of times when we hop on and we talk about large ranges for the market, right? Until the market this week is ready for a decision, right? Which means over 83, that's your first sign, and it needs to hold, right? If it's over 83, it has a shot right back to 87. If it's not over 83, then you have some structure here that it needs to break. And it's super possible that it just continues to chop in this range. It's unlikely, right, with the large events that we have coming on. But what I kind of want to talk about this week is how to trade in tighter ranges, right? And the reason for that is because we're used to these large ranges. We're used to markets moving. And while it looks like they will, we can't lose sight of what a tough market could look like, right? Choppy lows, which come and look like this, where you get lack of follow through, you get a positive stance, and then you just get a base, right? And if you get a base over the 82,600, that's your level, right? That's your level to say, okay, well, the market has a shot. Take on this 83. If it can base over the 83, where's it going to go? 85, right? 85 down to 80 would be a very tight range for the week. That would be your normal expectation of a tight range, right? An expansion of that tight range, which would be a normal trading range for the week, would be 78 to 88, right? 87, apologies, right? But there's a lot of positive base that needs to happen to even take a shot at 87, right? Can it happen? Absolutely, right? Do we talk about large ranges often? Absolutely. So I wanted to spend some time and talk about things that we don't talk about this week, because that's what the last 48 hours has been, right? So tight range is 85 down to 80 and a half. Don't need to go for home runs. It's the first week of the month, right? We just broke down again. The market's basically saying that if it wants to go higher, it can, but it needs to take its time to build that positive structure back, right? And so that's kind of been the epitome of March, is if we kind of zone out here, you get a large rally to 89 basically last week, right? Which was that weekly UP, and all of a sudden you just fail it. And where do you go? 84, which was right back to that mid. And then you take it out a little bit lower over the weekend session, but not follow through, right? And so until the market follows through, and that to the downside is really going to be under the 78 level, right? Which would have been your last month's lows. If we kind of zone out here, 78, 76, right? It's just really choppy, right? And so how do you operate in a market like this? You take your singles, right? Just get on base, continually get on base, right? It's baseball season here in the U.S., starting back up, and getting on base. While home runs are great, they don't come as often as an RBI, right? So getting on base is important. Hitting 5 bips today, hitting 5 bips tomorrow, hitting 10 bips the next day. That is how you survive these markets until the trend is clear. And that trend is not going to be clear until we really trade over this 95 area, right? Or under this 96 or 76 area, right? And bear markets are tough, right? And crypto bear markets, I guess, it would be, I say it kind of lackadaisically, is because I've been through many cycles where Bitcoin depreciates by 80%. So we're only down 20%. This, by all standards, is still a normal pullback. Even 35% lower, or sorry, 10% lower would be normal. That's what the April vol market's already pricing in. So expect any sell side moves that you get that are 3 days of just sharp moves, expect a rally and a sharp rally. Why? People have capital on the side that they're looking to put to use, right? And there is a point in time where markets do get beat up so much that it does not matter the news narrative. It matters about the value, right? And it matters about the asymmetry when it comes to crypto, right? So yes, absolutely, if you get a market that goes down to 72, sure, it could go down to 50, but those that are looking to get involved are likely going to start dipping their toes at 72, again at 50, right? There becomes a level that becomes attractive. And that's why the short side of the trade is super difficult. So now that we've talked about the smaller ranges, right, the 85 down to the 80.5, let's talk about the larger ranges just to make sure that we cover our bases, right? 82,600, we just talked about. We're basing over it. That's positive, right? Next 24 hours as we head into April 1st, that's your line in the sand. 82,600 needs to base over here and needs to make a positive stance over 83. If it can do that, then it's got a shot at today's highs, right? Today's show was positive, right? We had a shot, we had an opportunity to break down and we didn't. That needs to be noted. Either we're going to go and do a digestive trade here or we're going to start to rotate higher, right? And that rotation higher starts at 82,600, 83. Then we transition to that 85. 85 is that tight range, right? You can see the resting liquidity here on the right side in Bookmap at 85. Note that, right? You have resting liquidity sitting here on the offer right at today's highs. Also note that. That's important, right? Those are two levels that the market can naturally just gravitate towards, right? Next is that larger range expansion. For a normal range would be 87 down to 78, right? So if it's positive, expect 87 to be in play, right? How could that happen? We have two binary events that the market largely has been concerned about. If those concerns are overblown by any means, right, that's positive for the market, right? Even if a tariff comes out and it's lesser than what was expected, we are in the state of a market where, because the larger concerns have already been priced in, anything that's lesser of those larger concerns is positive, right? Which is also interesting to think about in markets, right? So those are two things to the upside to look. We have this green level here at 89. The expectation is that level should fail, right? So 89 is that level for the upside, to expect it to fail. If it doesn't, on the weekly, which is Saturday at 0 UTC, which would be April 5th, right, at 0 UTC, April 6th at 0 UTC, then that is a very positive show out of the market, and that really opens April up for a potential shift in trend out of what has been just a large digestive range, right? Let's talk about to the downside now. If you take a look at the downside here in Bookmap, downside's thin, right? So that's one thing to note. Under 82,600, that's where this positive show becomes into question, and at the very least, it becomes digestive, right? Digestive in a very tight range, right? 82.6 down to 81.6. That's a very tight range, right? If the market is bad, it needs to break these recent lows, which were made over the last 24 hours, right? And then immediately, it needs to price through here, right? If it breaks these lows and starts to base at 80.5, again, that's just a tight range, right? That would be uncharacteristic of the beginning of a month. However, we don't often talk about it, right? And that's what's been going on for 48 hours. So that is something to note. Under 78.2 78 and a quarter. Price is down to 76, right? 74. If you get a market down to 74, expect that the edge to the short side is potentially gone on a shorter term basis, and expect a sharp rally, right? You cannot press into 74. If you're short into 74, that just means that you need to lighten up, right? Just basic risk management as the markets just broke down outside of what the vol market's already pricing in, right? On the right side, you can see liquidity resting at 80, right? That's important. Again, that's in alignment with this tight range, 85 down to 80. And then other than that, there's not really a lot of resting liquidity to the downside that's populating the book here now. So take a look and monitor that as price depreciates. If we get there, today's show positive base off the previous week's low, holding that 82,600, that point's higher, right? Until 82,600 is tested again, all expectation is the market's heading higher. Okay. Let's take a look at Ethereum. Let's pull that up real quick. Same thing here in Ethereum. One thing to note in Ethereum, Ethereum's weaker. And it really just hasn't outperformed in quite some time. And so unless that narrative changes, which you can see in the ETH BTC spread, it's hard to jump on the bandwagon that Ethereum is going to outperform and it's going to be the next buy over Bitcoin, right? While it is being supported in similar ways, again, the narrative hasn't really changed. So there are things to look for, but it's just not happening, right? So we can't really suggest that until it does happen, or until it shows positive structure outside of what Bitcoin's been showing, right? So again, previous week's low, same digested bottom. This tighter range is 1960 to 1740, right? Let me pull up the multi-book on the right side. You have some resting liquidity around 1800. That's just that previous week's low. Again, that would fill the narrative of this tighter range. That's your resting buyers to take a look at. 1800, 1810, just in that range. It's a 10-point range. It's choppy, right? If we can't base over this previous week's close, which is about 1825, the expectation is we really are just in this choppy range. And until we break 1740, it's a difficult trade under the weekly directional, right? So that is your tight range. The larger range here to take a look at is at 20, basically 20 and a half level down to that 16 level. 16 to the downside is a very interesting level. It aligns with some longer term figures. And it is a large decline from basically those highs, right? So if you historically look at some of the declines in Ethereum on a year-over-year basis, we are down from 3,800. We're almost down, I think, 50% roughly. There does become a point again where prices just become attractive regardless of headlines. So if we can't hold the previous week's lows, the expectation is a digestive trade until we break 1740, but not digestive in a positive way, right? 1740 is kind of your line in the sand down to that 1600 level. And it's stair steps, right? So under 1600, the market can really take a stab down to that 14. It's basically 200 wide all the way down. 1200 down on the downside, 14, 16, right? Those are areas to look for to the downside. Again, can't press shorts into 1400. Fundamentally, it doesn't make any sense. Apologies. Fundamentally, it doesn't make any sense because you're slamming lows into what's already been an incredibly beaten down market. So it's important to remain tactical here. If you're going for the short side, look for short scalps. Don't look for home runs. On the bull side, market's weaker, right? So it's a difficult trade again. Over the previous week's close, which is 1828, needs to really base over 1860 to take a chance higher. It couldn't do it today. Bitcoin could, but Ethereum could not, right? So that is not positive, right? But as long as Bitcoin remains firm and Ethereum can base over previous week's close, it has a chance to rotate through this 1860 and take a stab at that 1960 level, right? If it bases over the previous week's mid, which is just the middle of the trade of last week, where can it go? Right back to that 2060 level, right? For the top side extreme, the market, if the market were really to make a positive show, the expectation is it could test that 2300 area. However, the expectation is it would fail, right? Until it trades over 2320 in this duration, which is April 6th, 0 UTC, then look for fades, right? look for reversals to sell. Where are those reversals to sell? A market that goes through 1960 and fades back under the previous week's mid targets 1860. A market that goes through and tests the previous week's high, which is right in that 2110 level, right? But fails, targets 1860, right? Where to take a look is if it's theoretically 2110 trades, right? That's an area to start if and only if the market rejects the previous week's high, right? If it's making positive price structure, and that's defined by higher lows and higher highs, don't fade it, right? That's a positive market, right? 2060, if it tests here and fails under here, that's a sign that the momentum is drying up, right? And those are opportunities to look for to fade calls for income, right? As we kind of figure out this digested range, or to look for some short-sighted scalps as well. So those are kind of the large range, the short range, the small range for trade as we kind of head through the week. If we look at Bookmap, where's the liquidity resting on the offer? 1870, right? Which is right over this 1860 level. Take note of that. That's important. The 1900 level, right? Also important. That's like basically right in here. Ethereum has been stop and go, right? So even last week when we got some positive show, stop. Positive show, stop, right? Until that narrative changes, expect that out of Ethereum, right? That is basically it for the week. I know it's kind of a shorter session just due to it's the end of the quarter. So we kind of need some new data, and we kind of need to see a few days of the first trade. But we'll open it up for questions. I know that looks like we have one person in the Discord, so feel free to drop it in Discord. I'm only answering questions in Discord, so if you're on the YouTube, feel free to hop over to the Discord and drop them in there. We'll open it up for 3 minutes. If there are no questions, then we can wrap it up early. Cool. Give it another minute and see if there are questions. If not, then we'll hop off. Awesome. Yeah. I'll drop in some new dailies when we get them. I'll be on the desk. We are starting a new quarter, so I'll be around all night. Feel free to hop in the Discord. If not, enjoy the week and good luck.